Good morning. Are we juicing? Are we juicing? Are we juicing? Are we juicing? Previously on Kimba TV. You got stopped out, I got filled. Shwiggity. So we had it like this, and I said, doesn't matter where you're gonna layer in, right? And so stop loss is behind that single print. Doesn't really matter how you want to get this thing, and then you're aiming for 67,000. And we shared that, I don't know how long ago, almost 12 hours ago now. Are we juicing? Hey, how funny was that stop loss or lack thereof, though? Can we give it up for the stop loss or the lack thereof? Can we get nasty with it? Can we get nasty with it? Oh, what a night. Alpeasy says that was insane. Alpeasy, were you here when I put in the stop loss live? So it's not like I had it low or I moved it or anything. I typed in 62850 live with you guys. Oh, you were here for it all? Good shit, good shit. Oh man, seems a little unfair. What I'm gonna do is I'm gonna zoom this out to the 67 peak like this, so you guys can see how much more open interest has to squeeze. Gumbler says someone sounds like Big Hangover. Yeah. You know your boy celebrated that 420 a little bit too hard. Let's get juicy with it. Alpeasy says, are you TPing 15%ish at that 67K area? So as of right now, I don't have any limit set to TP. That's probably what I'm going to do right now. So I'm going to shave 4 at 67. And I'll off of MEXC, and then I'm gonna shave 5 off of the Kraken. Yeah, I think. Do you remember what we were talking about yesterday when I said when 67 gets tapped? I actually think the stop loss cascade starts after 67. So it wouldn't surprise me at all to see like $1,000 deviation from 67 to 68. So that's why I said, let me zoom out and mark where that 67 is. And so you can get an idea of roughly where that open interest would reset to. So I think that reaction is kind of what matters, but yeah, I'll shave 4 at like 67.1. You want to do it? You want to do it together? So close 60. Let's do 67.50. 67.1 is fine. I hope I'm not being greedy. Close long. There you go. And then let me do the same thing for Kraken. Hold on. Kraken. Living Force says, if I can ask, have you been stopped out on the long? No. So if you watch yesterday's show, Living Forest, I put the 62850 stop loss live, even before it did the dump. So I'm sure you can find the clip, Living Forest, and you can even get my little quick take on why I put it there. Living Forest. So yeah, I got lucky. I didn't get stopped out, but that was based off of math. I'm not just randomly choosing a level. So it's a combination of ATR and where the single print was. What I'm trying to figure out is if the only thing that I'm going to try to figure out with something like this is where are people, the longers, going to get stopped out? Okay, based off of where that single print was, you know, there's going to be a lot of people that are going to try to put, long that single print, right? So the longers of that imbalance, where would the most amount of people get stopped out? And all I'm trying to do is avoid that. Sounds good? So that's all it is. Just try to reverse engineer where most people you think would get stopped out at. Just make sure you're not in that group and you're fine. Liamzi says pixel entry. Yeah, isn't that crazy? You know, we got filled live and I came back here and I was like, guys, I got filled. Yeah, look at that. That was live. That stop loss was live. Avoiding it was live. TP might be live. Woodpecker says, how is it possible if longs enter on Exo? These aren't market makers which are entering. So you never know, Woodpecker. But so here's the thing, Woodpecker. Are they market makers? I don't know. People have different definitions of market maker. Like in the traditional stock markets, do you know that a market maker is actually a job? They're the ones that are supposed to buy. They are almost from a legal standpoint, they are forced to buy when the markets are crashing. Market makers are the ones that basically saved the American economy from going even further into a more fucked up Great Depression. They were buying when the Great Depression was tanking the American economy. So market making is an actual technical job that a valid liquid market should have. Okay, the market makers, they buy when nobody else buys. So when you talk about like the stock market, did you know that there is an actual job called being a market maker? And they're supposed to buy when nobody else buys. Okay, so some people will think market makers are whales. Right? Some people think market makers are institutions. I don't think institutions and hedge funds are opening longs on Bybit. Okay? But the point that I'm trying to make is who gives a shit if they're market makers or not? Right? Sometimes people even ask me, hey, why are the market makers doing this? Why are the market makers doing that? Who gives a shit? I don't think we'll ever figure it out. What I do know is from the last 2.5 years that we've been watching this shit together, when positions open up on Bybit, or there's a CVD divergence on the Bybit BTC USD coin margined pair, there's a very obvious pattern that you can detect. So instead of sitting here and figuring out, are these market makers? Why are they doing this? I'm just going off of patterns. When they do this, this usually happens. Does that make sense, Woodpecker? So it's just about, oh my God, you guys can't see, fuck. Like that. I was just typing all that out. So it's not really so much as like 200 indicators. It's just like 200 concepts. You know, there's no indicator for a Kimba crown. There's no indicator to tell you that, hey, it's swing failing. There's no indicator that tells you, hey, it's failed auctioning. It's just shit that you know. Shit that you're aware of. You know what I mean? So when I say 200 indicators, it might seem a lot, but it's really not. In fact, you probably know a lot more than you think. Open interest is a great place to start. CVD is a great place to start. RSI is a great place to start. Fibonacci is a great place to start. This is like the concept in which I would always try to have people learn things is identify levels. Okay, and so volume based levels. Okay, so you've got volume value area high, volume value area low, volume point of control, time based levels, TPO value area high, TPO value area low, TPO, point of control, imbalances, whether it's single prints, fair value gap. What does Tony call them? Vector candles, CME gaps, and then unfinished zones. Bad high, bad low. Extra credit if you understand the difference between bad versus poor versus weak. Sweep levels. Fractal identification. Yeah, so if you're starting out as a noob, if you can identify these levels, I think you're in good shape. Because then, once you know how to identify levels, all this shit right here, identifying levels of interest, where you might short or long. Okay, all this shit is just to identify levels of interest where you might short or long. Okay, you want to talk about then you're gonna talk about divergence, RSI, CVD, open interest. You're going to talk about historical pattern recognition. This would include divs, fibs. This would include harmonics, RSI, MACD, basic oscillating data, structural edge, swing failed auction. And like I can go on and on and on and on and on and on and on. And this is for knowing you have a reliable edge to actually take the long or short. Okay, sorry. All right, I gotta get out of here. I gotta do this cardio with baby girl. There you go, like that. So, step 1, step 2. Screenshot that. Okay, I'm out of here. I gotta go do this cardio. Do you asking how to interpret open interest, or are you asking how to use it in our trading? If you're asking about how to use it in your trading, I think it's kind of individualistic. But if you're asking me what open interest means, open interest is indicative of how much money is being borrowed. Okay, so if open interest is going up, that means people are opening margin positions. You don't know if they're longs or shorts by definition, but you just know that margined positions are opening. If the open interest is going down, you don't know by itself if it's bullish or bearish, but you know that margin positions are closing. Okay, so for example, if the price is going up and the open interest is going down, that means that that is a short squeeze. And by definition, it's not truly bullish. So a lot of times when the price goes up and I see that the open interest is going down, I'm not afraid to short it. If the price is going down and the open interest is going down, I'm not afraid to long it. Alrighty, but you're gonna have to nerd out. It'll probably take a couple months, couple weeks, depending on how in depth you wanna go. But if you study for like an hour or two a day, it'll probably take you a month or two to cover all the things that you need to know about open interest. So Stario says, save me, Kimba. I've been at this for 5 years and I'm still losing big. It's so tough. Sending love to everyone. Stario, one thing, what I want you to try, if you're somebody that has been in the game for a really, really long time and you still feel like you're losing money, there's a very simple thing that I would recommend that you do, but I don't know if you're gonna stick to it. Do you know what it is? Every time you get into a position and it goes green, put that stop loss at break even. And stop taking losses. So you have to, like, it's foundational, right? You have to get this before you can move on to this. And in order for you to be able to really get this, you have to have mastered this. Would you agree with me, whether it's trading or whatever it is in life, would you agree with me that there's levels to improving and you can't skip a level if you want to keep progressing? I'm just talking conceptually. I'm not even talking about trading. But would you agree with me that you can't, like, there's certain things you got to get this figured out before you can get this figured out. And if you want to get this figured out, you got to get this figured out. Can you really jump around and skip? I don't know if you can. So I think the first thing that you have to figure out is stop losing. So that's step number one, stop losing. So it's either you need to improve entry because your entry sucks. Stop being greedy or hopeful. Stop loss and profit every single time. Step one, stop losing. Right? Step two, be patient. You either get filled or you don't. Stop chasing. Okay? You know what's step three? Plan better. Because if you're like, fuck, man, I'm patient, but I keep missing my limits. Okay, then we're gonna do plan better. But if you can't do this, I can't take you to step three. Okay? I can't ask you to be patient if you can't implement this. And I can't talk about planning better if you can't at least get this portion right and control yourself so that you either get filled or you don't. So maybe it's something like this, Stario. But figure out what it is. Like, those steps are going to be different for everybody. But you got to be self-aware and self-honest and start to figure out how you want to improve. Everybody is going to have different steps, but maybe that's where you start. That guy Roja says you pulled fibs. I'm assuming you looking for a short. Nope. Well, you want a quick recap? That guy Roja. So here's the 30-minute that guy Roja. So that guy Roja, bad. So those are sweep level candidates, okay? Some people, I don't know why, but they're already in shorts before the bad high gets swept, okay? So for those people, that fib that I drew from here to here should guide them on where their stop loss should be. That guy Roja. But if you see this, I think you would be safe to assume that if I were to think about hedging a short, I would wait for a swing failure pattern so it breaks, and then whether it's a 30-minute or a 1 hour, the body candle closes below the sweep level. Okay? Some people, I mean, it's not wrong to be, but some people were like took shorts here, and I was like, I mean, you can always put your stop loss at break even so you can't lose, but theoretically that would be the best short, right? Now, if for some reason it's gonna just continue to build bad highs and not sweep, that's okay. We're gonna save that for later, okay? So that would get used as confluence for a long when we go down there, all right? If you're already in a short, like I said, and you're gonna continue to make lower highs, it would be because you're failing an auction to breach above the previous month value area low. Okay? So it tried to get back in, but it fails auctions and it loses being able to penetrate the previous month value area low. Okay? Now, some people were asking, and this is why rewinding is always good. Some people were asking, hey, on the Big Daddy fib, like this, okay? You see what it's doing? Not only that, but also here. So however you want to pull it, this, it's all kind of, you know, whether it's a fib or whatever single print, it's this has to hold for bullish momentum. All right, that guy Roja. So no, I'm not looking for a short because I'm already in a long, and I have my TPs already set. All right, I have TP set from 750 to like 67.4, and I'm shaving proportionally on the MEXC and the Kraken position. All right, so that's your recap. But bing bong ding dong, any questions? You good, Dagairoa? Yeah, to be honest, I was expecting a rotation from value area high to value area low to back test here. That can still happen. So that guy Roja, how would you have a high probability that you would be able to swing from value area high to value area low? How about a bearish structure? Now it would be a bearish structure over the weekend, okay? But how sick would it be if you once it does that and it breaks that lower low? Theoretically, if you really want the easy money play, that's when you enter. You know? So a failed auction, bearish retest, get nasty. Imagine if you have a bunch of open interest that indicates that there's longs open there, and you still have not closed on the bearish retest. Boy. So anyways, totally not impossible that you could definitely get that, you know? So That's why like being patient and watching the data come in is a lot better. You could have been you could have been like, yo, swing failure pattern, yeah, and then just get wrecked, Or it could be like, you could still try to take that, manage good risk, or you could be like, okay, you see how like I haven't opened the head short yet, but if it does some goofy shit like this, and it does this, and it does this, and I see longs trapped here, I'm going to be like, God damn it, Sato! And I will hedge short right here. Right here. Sounds good, that guy Roja? And I probably would, I have my stop loss right there, right? In profit that I infamously did not get tippity tapped on. Now I know that we're starting to go back down, and those are all, if this gets dominoed, it's going to go, bitch. It's going to go, bitch. I don't want to get bitched. Okay? So if it does this, if it grabs all the single prints and it does a bearish retest, where do you think my stop loss is going to be? One, structure would be indicative of a lower low, but I'm probably going to have to take it behind that TPO point of control. But there's no way that I need to do it here, and there's no way that I need to do it here. There is a small chance that it only eats a little bit and goes, but that's a small chance. So if you want to play it by the book, all that shit is probably going to get bitched. You probably don't want to be waiting at the back of the bus, Just get, that one, like you could start shaving like that. That's what I would probably do. Any questions, y'all? Gucci Magucci.